Hello everyone, this is the pre-market report video for 17th January 2023 in terms of Nifty and Bank Nifty. Yesterday, US market was on holiday, but other Asian markets and European market was open along with the Indian market. So first, let's have a quick look on what happened on Indian market and European market yesterday, and then we can discuss about what we can expect today. Yesterday, Nifty opened a gap up of 75 points and within 15 minutes, it dropped below 18,000 and in the next 15 minutes, it dropped another 50 points and then till 12 o'clock, it maintained around 17,950 and then it started to further slide. However, the positive European market opening supported a bit, but the selling pressure on index heavyweights pushed down the Nifty and closed just below 17,900. At present, most of us know FII has been selling continuously for the last 16 trading sessions. Then yesterday too, they did net sold shares worth approximately 750 crore rupees. So just DII, they net bought shares worth approximately near 685 crore rupees. Yesterday, before our market opening, early morning Japanese producer price index data was released. Wholesale inflation data for December month. It comes as 42-year high. In terms of number, it is 10.2% against expectation of 9.2%. This made the Japanese market to open gap down of over 1.5% and it closed around 1% less. This inflation increase created the uncertainty in the Asian market that whether Bank of Japan will increase the interest rate or not, which is due to release tomorrow morning. As I said in my weekend video, last month, in December, because of their interest rate decision statement, Nifty dropped over 200 points on that particular day. Yesterday, again that uncertainty put some pressure on Indian market as well. Since that's the reason, despite the gap up in auto sector, it dropped heavily as the sector is closely linked with Japan. Additionally, at present, I'm collecting data for one of the upcoming video regarding budget expectation. In that, I found there is a fear at present that Finance Ministry is going to change the long-term capital tax structure. At present, the duration for long-term capital tax applicability in equity market is 12 months, but the expectation is that Finance Ministry is going to change that to 24 months. And I'm just connecting the dots. That might be the reason for continuous sell-off by FII. Anyway, now coming to European market. Before the German market opening, Germany's statistical department released their wholesale inflation data for December month. The data comes as 12.8% and it is better than the November month, which was 14.9%. To be frank, it's still high, but it was rapidly decreasing for the last 3 to 4 months from near 20%. This made all the European stocks very positive and closed positive. Then regarding SGX Nifty at 3 AM Indian Standard Time, it closed at 17,959, which is kind of indicating again 40 points gap up opening today. So that's all about what happened on yesterday. Now coming to today's Indian market related info. First, in the aftermarket hours, yesterday, Indian government decreased the windfall tax on crude oil, diesel export and on the aviation fuel. This is a positive news for Reliance. But JP Morgan said that they expect Reliance Jio's EBITDA to fall around 7% in the next financial year and it is clearly negative. I don't know which info weighs over which, but I let you guys to decide. And the other item I want to highlight is regarding the India's wholesale inflation. The data comes as 4.95% against last month's 5.85% and it is 2-year low, which was really a good number, but it gone unnoticed yesterday. So as a summary, at present global momentum is marginally positive, but as I said, there are some mixed information regarding Reliance. But metals and IT looks good and there is no impactful news for banks. Then regarding the items we need to look out. First, regarding earnings, there is a schedule for release of ICICI Life, TV18 and Bank of India. In terms of macro, there is no scheduled release that I am aware for India particular. But early morning before our market hours at 7:30 AM, there is a schedule for release of Q4 China's GDP growth rate. Last quarter, in Q3, despite their zero policy, the Chinese economy advanced by 3.9% on year-on-year basis. This time the expectation is just 1.8%. Again, Chinese growth rate always got the direct impact on Indian metal stocks. Then during our market hours from 12:30 pm to 2:30 pm, there is a schedule for release of various European countries' consumer inflation data such as UK, Germany and Italy. Here, UK and Germany are the important one. As I said in my week ahead video, as long as there is no drastic change, we don't need to worry too much. Coming to technical, both Nifty and Bank Nifty forms a long bearish candle, not exactly a cloud cover but a close formation. Again, it's kind of range bound between 17,800 and 18,100. So if it breaks 17,800, then we can expect more correction. And if it passes above 18,100, then we can expect there is a more possibility of moving upwards. Then as a moving average summary for Nifty in daily chart, yesterday it drops below the 5 and 100 day simple moving averages, which is technically significant positive. So as a moving average summary for Nifty, it turns to sell signal from neutral. In case of technical indicator summary, it's same and strong sell signal, as more number of technical indicators are indicating the sell signal. Even RSI value dropped from 44 to 42. Then in case of Bank Nifty, it is same as Nifty. I mean, as a moving average summary, it's a sell signal, and in case of technical indicator summary, it's a strong sell signal, and RSI value is around 44. Then from option change in open interest, there was a huge number of significant new call option open interest added at above 17,900. And 18,000 got the new maximum nearby call options added, followed by 18,100. So 18,000 is the immediate resistance, and if it breaks, then 18,100 is the strong resistance. Then regarding overall options open interest data, 17,900 got the significant short straddle, and also it got the maximum put option. So the next nearby maximum put option open interest is present at 17,800. So 17,800 is the immediate support. Then coming to Bank Nifty, based on change in open interest, again it's similar to Nifty. Significant huge number of call options added at above 42,200, and some put option unwinding took place at 42,200 and below 42,400. It's difficult to conclude anything here, and based on overall open interest data, the maximum nearby call option open interest without short straddle is present at 42,500. So 42,500 is the resistance to break, and still the maximum put option open interest is present at 42,000, but it also got significantly huge call option open interest. Thus 41,500 is the immediate support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the videos. It will help me beat the algorithm, and it will also motivate me to do more. Please don't make any investment decision based on this, as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.